Hello, it's Brian Shannon from AlphaTrends.net. Today is Thursday, the 13th of November, 2008, and we had a real wild day once again here today. The market, we were looking for new lows and got them this morning, and we saw that from that failed move the failure of that move to hold lower, we got a very strong and fast move here this afternoon. So the market did make that lower low, and the volume increased dramatically today as we saw the buyers came back in. So let's take a look at the shorter term time frames. First, let's look at the two-day time frame. You can see here this morning it kind of chopped around a little bit, but when it broke this little level of support just above the prior lows, this level is about 28 and a quarter. The prior lows were 28.04, and we took those out pretty decisively here in just one swoop lower, and then from there it just continued to bounce higher. That level actually for the S&P 500 was the daily S2 level. We'll take a look at that later. But here on the daily on the 1 day time frame, you can see that the sellers were clearly in control, but we saw this big volume down here, and then we started to see volume increasing on these rallies. The market was able to get back above the daily VWAP, and that gave me reason to believe that maybe this failed move lower could continue to rally in the afternoon. We might see a continued move higher. So I was looking at it in here, kind of thinking, well, what's it going to take to get it going? And I posted on the blog that it was holding just below the 2-day VWAP. This is the volume weighted average price for the last 2 days. That moves with every trade in here. And for the people that email me and ask me what are the settings for VWAP, I don't use any settings. It simply takes in all the data for whatever time frame you're looking at. So this is through over the course of 2 days. So it did break above that level. That was a good place to get long, and then it pulled back. That level held as support along with this prior level, which was important. I outlined that on another video that's only on my blog, so take a look at that. I'll show you how I traded basically from this point forward and added $2,000 to my gains for the day on this rally right in here. But anyways, we're back up above this 5-day moving average. Ideally, what we'd like to see would be maybe a little bit further strength tomorrow, pull back, and then hold that 5-day moving average. The way these bear markets tend to go, though, is they run without looking back because everyone feels as though they missed the boat, and then they chase prices higher, and they get up to a level where they can't be sustained, and then they drop back down again. So we'll see how this rally unfolds, but this could be, and I think I said it last time too, but this could be the start of a bigger rally because we have seen now another lower low here, and with all this volatility in here, I think we've shaken a lot of people out, and now we can look at perhaps higher prices. But again, as always, risk management is job number one. So what we want to see hold for now, we saw that trend line break. So 29.50 is going to be our first level of important support. If that fails to hold, then just below here at about 28.80. And if that one fails to hold, then I think you've got to be a lot less optimistic about this market. So right now, 29.50, 28.80 are potential levels of support if this market begins to pull back. And of course, we'd like to see it hold that 5-day moving average and see that 5-day moving average flatten out and start to turn higher. And then we can be in a position maybe to think that it can sustain a little bit of a rally. I got some emails say, when do you know that it's turning? How do you know it's for real? And you never do know it's for real. But when you get involved, what you do is you get involved and you hope for the best. You look for potential levels where it's going to slow down, and then you just manage risk. So if you're listening to the message of the market, higher highs and higher lows, depending on what time frame you engage the market on, your job is simply to listen to the message of the market and adjust your risk accordingly. Not to impose your belief on it and say this is it and try and go all in and that sort of thing, but instead, like I said, listen to the message of the market and do what the market tells you to do. Interesting enough, all these markets, it's one day they're all down, the next day they're all up. Gold and oil were up today. Gold made a marginal new low as well, so perhaps we're going to see a little bit further strength up to that 50-day moving average for the USO. Still clearly the weaker market in here, but we did see some strength, and the Russell 2000 was up $3.75 or 8.2%. So same story in here. We got a low lower low. The market came down, and we got a much bigger volume move in the afternoon. Let's take a look at the 10-minute time frame here. You can see where really the majority of the volume came in the second half of the day after those lows were made. I think we just ran out of sellers once again, and it doesn't mean that this market can continue. Maybe it goes up towards this level here. Let's say 51 or so, and then maybe we're gonna build another one of these inverted head and shoulders patterns. You never know. A lot of times the bottoms do make those inverted head and shoulders patterns, but obviously there's going to be a lot of people looking at this rally feeling as though they missed out. They're going to chase it, and will we have the same outcome as the last few times we've seen people chase these rallies only to fail and for them to spit their stocks back out with broken dreams and empty wallets. But again, let's see if what happens in here. Risks, I think, of new purchases are higher just because we've gotten we just ran in this Russell 2000 from 43.30 up to 49.30, so 6 points, or about 15% or so if my math is correct. So we saw a very big rally in there, and they can continue, but if you're still long, just manage risk. That's always job number one. Let's take a look at the financials. They were up $1.02 today. You can see that they've broken their most relevant trend line here on the 10-minute time frame, and they kind of did battle with that trend line in here. Let's switch it to a 5-minute time frame. They were able to make this higher low and then just squeeze them higher into the close. So on the 1-minute time frame, this is where that daily VWAP came into play twice, and then late in the afternoon, of course, we just saw them just shoot higher right up into the close. Obviously, we're still in a bear market, but the fact that we made these lows and shook some people out might lead to what we see here is maybe an exhaustion of the selling for now, and perhaps we can continue to rally higher. There's obviously from day to day, week to week, there's just tremendous opportunity, long or short, in this market. The S&P 500 put in a very impressive large green candle here with big volume, and we saw the same thing. Lower low in here, shook some people out, got the last of, people look at these levels and say lower low, and a lot of times that's what it takes to turn a market. There's a article on the side of my blog under popular posts. I'm trying to look for it right now. It's called hold on one second, I'll slow the video. It's called Turnaround ? And it's about basically trapping people. The people who, the amateur technicians who get short, wait to get short on a break to a new low. After the market has already declined 12%, they sell short under here. The market turns around. The longs who liquidated their positions with stops in there. We've basically seen the weakest holders give up their positions underneath that level, and now the market's turning back higher. So what happens is, those shorts go in to cover their bets, and they scramble too, because every tick higher costs them money, obviously, and the people who sold their long positions might be looking to reestablish those. So we've gotten rid of supply already, and now we have all this increased demand. It makes for a very powerful combination to the upside, and that's again what we saw in the SPY, that here on the 1-minute time frame, we had gotten that shakeout very quick in here, and then this pattern of higher highs and higher lows emerged. We were seeing nice volume on the rallies, followed by the low volume pullback in here to the daily VWAP. That held, and then they took out that 2-day VWAP right in here, and then that held as support. So this resistance became support in here, and then again squeezed them higher into the close. So we expended some energy today, but I think we could probably continue to rally a little bit here. Ideally, for the S&P, we can look at the important levels in here. Obviously, this 5-day moving average just below 90, or at about 89.70 or so, and then at about $88 a share. And obviously this higher low right in here near about 86. That's going to be an important level as well. So continue to trade it, because there's a heck of a lot of opportunity out there. You have to be very aggressive and very disciplined at the same time.